It's time to talk the walk. I'm your host, Harminder Singh. We're going to continue our tech talks on the show since that's our future, whether we like it or not. Today, my guest is involved in disrupting the way new projects are funded and has his finger on the pulse of all things crypto. Bank to the Future CEO Simon Dixon, welcome to the show.
Thanks for having me.
Good to see you again. It's been a while. So since a couple of years ago when I first met you, Bank to the Future was still in its infancy. For people who don't know, what is Bank to the Future?
Bank to the Future is an online investment platform for building a portfolio, buying and selling shares in the latest crypto and financial technology companies. We believe that every single financial product is going to be disrupted by technology. We don't know which companies will succeed, so we bring the biggest opportunities in the crypto markets for people to buy and sell shares in those companies. And
right now, how many millions of dollars have you funded so far?
So far, there's been $745 million invested in the crypto companies listed on our platform.
And that's massive, considering that everybody is writing about the doom of crypto because Bitcoin's in a bear market. Everybody knows that. But how are you seeing this bear market?
Well, I spoke at the very first Bitcoin conference in the world, and so this is my third major bear market in crypto. And what I've seen is most of the people that have generated significant wealth, the investors through our platform, were investing during the bear market in order to benefit from the bull market. So the crypto market has wild swings and wild fluctuations. I've personally seen my $30 Bitcoin become worth $3, my $1,250 Bitcoin become worth $250, and more recently, my $20,000 Bitcoin become worth $3,000. In my expectation, I fully expect my $100,000 Bitcoin to become worth $20,000 during the next bear market too.
So you expect these wild swings?
Yeah.
And you don't consider any of these sudden plunges to be the death of Bitcoin or crypto?
Absolutely not. If you look at the bear market, the amount of innovation, the amount of technology that's being built, the amount of new players, Samsung has just integrated blockchain into the next phone. Every investment bank in the world is looking at their blockchain and how they're going to deal with this disruption. Every central bank is now launching their own cryptocurrency. The amount of attention, the largest stock markets in the world, Nasdaq, New York Stock Exchange, are all launching their own cryptocurrency exchanges. And they're all doing that during the bear market. Now, these companies do not invest significant resources in fly-by-night things that are about to go. But what the bear market does is it gives us an opportunity to breathe. We were in 2017, the crypto market was onboarding the whole world in a frenzied bubble of people trying to understand and get into this technology. Now we've got a chance to build and scale. We can deliver better customer service as companies. And we've got an opportunity to really get this industry ready for mass adoption.
Since you talked about Bitcoin, blockchain just now, how ready is blockchain to be used in the mainstream, or is it still very much in its infancy? And the other question I have is blockchain a buzzword, or is this a real thing?
Blockchain is a buzzword, but it's also a real thing. So the technology is not quite ready for mass adoption, depending on your definition of mass adoption. So at the moment, Bitcoin is a product that's ready, that allows people to own their own money, spend their own money, and have a monetary policy that they can rely upon that is fixed and will never change, which is different to every fiat currency where you have to deposit at a bank, you can't own it, you can't spend it as you wish if anyone doesn't like the way you're spending it or the amount you're spending. And the monetary policy always changes, depends upon the government's goal of how they want to support the economy. And so Bitcoin is the world's best shot we have at achieving sound money at the moment. And that is working. It doesn't scale to the scale that like Visa or Mastercard do, where you can do hundreds of thousands of transactions per second. However, the technology, the new innovation, and new things that are coming out right now are actually designed to enable for infinite scaling. So it's still early, but we're 10 years into this experiment. Pretty much everyone in the world has heard of Bitcoin. They may have a different perception of what it is, And all of the large companies, all of the financial institutions, and every central bank and government in the world is looking at how they're going to adjust to blockchain, which I think is tremendous amount of progress that has been made in something that was never meant to succeed, was too crazy to even be considered, and that was Bitcoin when it came about 10 years ago.
Is blockchain the ultimate disruptor in the financial market, or is it something else?
It's definitely going to change. It's going to change the way that people do things. Financial institutions may not get disrupted because they may decide to actually adopt this. So companies like Goldman Sachs and JP Morgan just launched their own cryptocurrency. I don't think it can compete with Bitcoin. It's a different use case. And it has many disadvantages compared to something that's decentralized and not controlled by a financial institution. But blockchain itself is, I believe, going to have the biggest impact in financial services. There are many people that are looking at different use cases that you can do. We haven't seen too many of those come to fruition yet, but disruption in financial services is real, is here, and every financial institution in the world is looking at how they're going to deal with that disruption.
When you say Goldman Sachs has released its own cryptocurrency, what does that look like?
So JP Morgan's released their own cryptocurrency. Sorry. Goldman Sachs is doing their own trading desk and exchanges and things like that. Right. So what JP Morgan has done is they've copied an innovation that was created by one of our portfolio companies, Bitfinex. And Bitfinex created a cryptocurrency that is pegged to the dollar. So for every 1 unit of that cryptocurrency exists, there is $1 at a bank that backs up that cryptocurrency. And this was a tremendously useful innovation because it allowed people to stay within the crypto ecosystem and transfer value just like you would Bitcoin, but pegged to the dollar without having to take any of the currency risk or volatility risk, which allows for a suite of different financial products, easy transferability of money, and only going back into the dollar when you need to go back into the dollar and creating a tax event. So it's a very interesting thing, and JP Morgan has essentially copied that innovation, and they're looking to do it between interbank settlements, between trillions of dollars that they're settling between banks, and eventually they gave a comment that they would like to release that similar to how Facebook is right now, where they're releasing their cryptocurrency pegged to the dollar that they're going to integrate into their technology.
Interesting, because Facebook just came out and said that they want to focus more on instant messaging instead of their big social media network known as Facebook. They also own WhatsApp, so I'm assuming that's where, or Messenger as well, so that's where they might go. Are they thinking transactions through these instant messaging apps and using crypto to do it instead of dollars and credit cards and all that?
Yeah, so Facebook have a room of 60 developers that are locked in secret at the moment with their blockchain strategy.
I wouldn't be surprised if that was true.
But the rumors and the reports are that they're creating a stable coin like Tether. They'll probably hide the cryptocurrency under the rails, and it will prevent them having to pay fees to companies like Visa, Mastercard, and Swift. And so it's creating disruption in those middle people that are creating friction. Yeah, it's a different use case. It's not really competing with Bitcoin. It's just a new use case of blockchain technology in financial services where technology companies are disrupting the banks now.
So what happens when, let's say, the Facebook crypto starts becoming more adopted? I mean, it's 2 billion users. Even if 100 million users use that crypto, that's a big deal. And what does Visa, Mastercard, Swift, what do they do then? How do they adapt into this new crypto world order that seems to be developing?
Well, there's a couple of questions. There's two parts to our industry. There's the regulated industry, which transacts and interacts between the cryptocurrency and converting it into regulated fiat. At the moment, there's a lot of friction there. It is still, traditional currencies that need to be converted into cryptocurrencies, and that part of the industry is still expensive. There's still middle people. There's a tremendous amount of compliance. There's the ability to detect any money laundering and everything that happens when you convert a cryptocurrency to traditional money. There will still be lots of fees to be earned from that industry, and I think a lot of these incumbents are going to enter the transition between cryptocurrencies and traditional money because that's still the same industry. At the same time, consumers are going to have choice whether they stay in cryptocurrency. And if they stay in cryptocurrency, there's going to be more and more options for them to stay there. And it's a lot faster, it's a lot more efficient. However, at some point, if their country is still, if you have to pay your rent in a traditional currency, then at some point you're going to have to onboard the cryptocurrency through the regulated environment. And at that point, there's plenty of fees for traditional financial institutions to make there. And new financial technology companies are going to disrupt and be more competitive there as well.
Okay, I'm going to take a quick break. We'll be right back after this.